The upcoming tax hikes could be the final nail in the coffin for thousands of UK businesses. If you don't prepare now, you could be handing over more of your hard-earned profits than ever before. There's rising national insurance costs, harsher capital gains tax rules, and these changes are going to hit businesses hard. If you're already struggling with cash flow, this could make things even worse. Now, UK insolvencies are increasing like never before, so failing to take action now could be a fatal mistake to your business. If you ignore these tax changes, you might find yourself facing higher costs, tighter margins, and serious cash flow problems that could push your business under. And once you're in financial trouble, getting out is much harder. Now, I want to take an example of a business owner in Tamworth. He runs a trampoline park. Due to rising costs, he's already had to cut opening hours and make senior staff redundant just to keep his business afloat, and he's not alone. Businesses across the UK, especially in hospitality, retail and construction, are already struggling to survive. The numbers don't lie. Insolvencies are rising, and businesses that don't adapt to these changes will be next. So in this video, I'm going to break down exactly what these tax increases mean for your business. We're going to be going over the risks ahead, some real life examples. We're going to talk about some businesses that are already feeling the pressure, and most importantly, some steps that you can take right now to protect your company. So stay with me, because what you do in the next few months could determine whether your business survives or struggles. Welcome, Chris Worden. I'm from the Director First team. We're here to help UK business owners understand a bit more about insolvency and what's going on. Now, what are the April 2025 tax increases? Well, let's start by breaking them down and what's actually changing. So, number one, employer national insurance contributions. They are increasing. The rate is going up from 13.8% to 15%. The salary threshold at which employers start paying NIC is dropping from 9,100 to 5,000. Now, this means businesses will pay more on more employees than ever before. Corporation tax is staying at 25%, but the impact will be bigger if your company makes over 250,000 in profit, and you'll pay the full 25%. If your profits are between £50,001 and 250,000, marginal relief applies, meaning you'll still pay a higher rate than before. Now, for businesses under 50 grand profits, the 19% rate will remain the same. Now, capital gains tax is increasing. Business asset disposal relief, formerly entrepreneurs relief, that's also going to increase, and it's going from 14% in April 2025, and in April 2026 this is rising again to 18%. This means that if you're planning to sell your business assets or shares, you'll lose more of the profits to tax. Now, these changes might not seem huge on paper, but when you combine them with rising operational costs, inflation, wage increases, they're going to put a serious dent on most businesses. And why this is such a huge problem for business owners is because these tax increases, they're not in a vacuum, they're not on their own. You know, everything's costing more. Businesses are struggling with the rising operational costs. Your energy bills have gone up again. Materials have gone up again. Logistics have gone up again. You know, businesses are seeing the profits margins diminish, shrinking, and evaporate entirely. And that's without even talking about higher wages. The national living wage is going up by 6.7%. If you employ staff, your wage bill is about to get bigger, on top of the extra national insurance you'll have to pay, on top of the uncertain economy. It's a bloodbath out there. This is going out in March 2025. There's geopolitical tensions. There's still post-pandemic disruptions. The market's, it's unpredictable. Consumer spending is down. And listen, I don't want to be the bearer of bad news, but I'm getting about 600 inquiries a month of businesses that are finding it hard to make money. Now, so some of the factors we've talked about, these factors are going to be the straw that breaks the camel's back. Now, I'm going to give you some numbers now. In January 2025, there were 1,971 registered insolvencies in England and Wales. That is a 6% increase from December 2024, the month previous. And it's an 11% rise compared to January 2024. If you're in hospitality, retail, construction, you're getting your arse handed to you. I get inquiries off these companies all the time. Now, there was a report done, and they think 70% of UK hospitality businesses have already said that they're going to have to cut staff due to these tax hikes. Now, are there some things that you can protect your business from the tax increases? Well, I suppose the good news is there are steps you can take to reduce the impact of these hikes on your company. I mean, one of them, and I suppose it's easy to say on here, it's to improve operational efficiencies. You know, where can you cut costs? Are there any unnecessary spending that you can cut or reduce? You know, looking at that P&L, going back to your suppliers and negotiating better deals. Are there some people that you need to let go? Are there some luxuries in your business that you need to let go? You know, are there any processes that you can save time on? Is there any way that if you make redundancies, there is extra capacity in the workforce that you have to pick up the slack? Another thing is restructuring finances. And I'm not necessarily talking about an insolvency restructure. I'm talking about dealing with suppliers. A lot of people will have HMRC arrears at the moment. And one of the worst things you can do with HMRC is ignore them, because they'll shout louder and louder, and eventually they'll be on your doorstep looking to take goods, or even worse, they'll look to wind your company up. But you can speak to HMRC and negotiate longer time. It's called a time to pay arrangement. And that's where you agree to pay your HMRC, VAT, corporation tax, PAYE, or all of the above over an extended period of time. They'll give you 12 months. In certain cases, they'll give you 2 and 3 years, but you've got to have a really good compliance history to get a time to pay over 2 or 3 years. But most people watching this should get 12 months. But the key is you've got to speak to HMRC, and you've got to get your returns up to date. There's no point doing a time to pay arrangement if you're going to miss your next VAT quarter, which is due by the end of March. So get everything up to date and speak to them. Because if you get a time to pay arrangement, that's great. But if you don't keep up to date with your current HMRC commitments, then the time to pay arrangement fails and you're in breach, and they'll start the process of winding you up. And it's the same with suppliers. If you're behind with suppliers, so many people will just stop dodging calls and ignoring suppliers. Be different. Speak to the supplier. Tell them what's going on and make the best deal you can with your creditors. Because I find if you're talking to creditors, you've got less chance of them starting legal action against you, okay? Now, there are obviously some reliefs as well. There's some tax reliefs that have come in. Employment allowance is increasing from 5 grand to 10.5 grand. This should reduce your NIC burden. And there are capital allowances that can help lower your tax bill. So if you invest in equipment or you invest in property, you should be able to get some tax relief. Now, I am not a capital allowances specialist, but there are plenty out there. Another thing that you might want to consider is, is there any way that you can launch new products or services that fit within your industry? Now, somebody mentioned to me the other day, something we could do is sort of offer some advisory to businesses that are in debt, and where they pay a subscription to us on a monthly basis while they're in the mire. Because most of our inquiries, they don't end up in insolvency. We give them some free advisory and they get out the woods. We've just got to sort of look at it from our point of view. Is like we're fairly stretched at the moment. So how would we price that? Would that be taking us away from our core business? But you can be looking at new bolt-ons that you can be giving your staff. Like one of the things that we could be doing is perhaps helping you get finance for your new companies, or looking at your factoring deals, or potentially introducing you to other services that you could use that we could benefit off. I think for you guys out there though, is there anything else that you can be doing that can be bringing money in? I think you could all be seeking advice and support. And I'm not talking about picking a phone up to me. If you think that you are past the point of no return, that's important here. If you don't think you're going to be able to get out of your struggles with your business, then pick the phone up. We'll talk to you about where you are, where you want to be, how can we get from A to B legally, okay? Talk about what problems there are for you. But I think like joining support groups or speaking to other business owners is helpful. And maybe try, if you have mentors or people who have been where you're at. I remember when my business was going down the pan and I was stuck in my own head because I couldn't tell anybody what was going on. I was too proud. And you know what I've learned over the years is a lot of people are free with their time. And if they're ahead of you in the game of business, the good people will try and pull you up and share some of that experience. So whether that's networking groups or speaking to people who may have been in this situation, get out your own head. Now, I suppose I want to sum up, what should you do now? These tax changes are coming, whether we like them or not. The key is preparing now so your business isn't caught off guard. What you need to do immediately is review the finances, understand exactly how these increases are going to impact your business. And that really goes to sort of some cash flow management, projections, what's going to happen. Look at that profit and loss. Profit and loss is something you should be reviewing every month. And can your business stomach these tax increases? Make a plan. That might be cutting costs, renegotiating with suppliers, restructuring, increasing revenue, making staff redundant. Just don't wait until it's too late. And if you need to, talk to a professional, get some expert advice to ensure that you're making the smartest financial decisions possible. Let's keep the conversation going. Any questions? If you write a comment, I'll respond to it personally. If you want a conversation with one of our team, reach out, director first. Thanks for your time. God bless you.